Everybody, it's Carmasino here at Chaikin Analytics. I'm the Chief Market Strategist, and this is our Chaikin Power Feed video series. So we're kind of going to go over some things that we write about here today through the video. And one of the recent articles was about Apple. And, Apple released a new product, a really cool set of what you would call, I guess, virtual or AI type glasses that you can wear, but they're more like goggles. They're called Vision Pro. And look, they're not for everybody. They're $3,500 per set of goggles there. Really not made for the mainstream user. However, a lot of people did pre-order them, and the orders got up to close to $1 billion or so, roughly. Right now, the point here is to kind of look at that's really such a small part of Apple's revenue, not really that significant. And it's not going to be a game changer. Now they'll develop technology from this and probably learn a lot of things and get some data feedback and build on that. Right, a lot of companies will do that with a big launch like this really expensive product. So you get a small user group and they'll figure it out from there. But again, it's a drop in the bucket compared to their $90 billion roughly total revenue in general. But there's another company kind of doing the same thing. It's called Meta. You might have heard of it. People used to call it Facebook. The Meta standing for the metaverse. They're trying to, they have a division there. It's lost money. There has not been really the best investment by the management there at Facebook. But my point is they actually have a competing device, a little bit more manageable for the typical wallet for most people here in our country and maybe around the world. It's about a $300 product, and it's a pair of eyeglasses that you can wear, and they're made by Ray-Ban. They're actually pretty cool looking. They come in a multitude of colors and styles, and it's not this giant set of goggles. So think about the two, right? Both of them are roughly kind of in the same use category. I think Meta's maybe a little bit more useful, but this all kind of boils down to two things, right? We're looking at Apple and Meta, these two mega cap names. They're part of the Magnificent Seven, right? These little products that they're launching are kind of like test things. It's not going to change the game plan for the overall company. It might in future years, but right now that's not the case. Right now, Apple's chart's looking sideways. We're going to look at that chart. We're also going to compare it to Meta, and we're going to look at the Magnificent Seven in general. I think they're turning into the Fantastic Five. That means two of them are dropping off. So let's take a look at these charts right now. As you can see, I've got the chart of Apple here, and I want to point something out right away. Right, we have the Chaikin Power Gauge. It's a 20-factor model. Right, we can look at things like financials, earnings, technicals, and experts, and each category has about 5 subcategories. Right now, the way we model and weigh those factors is adding up to something called neutral plus, which is actually bullish. It's neutral plus because Apple right now is trading below its long-term trend. So we downgrade and upgrade the stock when it moves above or below if the fundamentals are still intact, which in Apple's case they are. However, the price condition of this stock is telling you something different. It's developing to the downside. I'm not saying it's crashing or anything of that nature. What I'm saying is we've got a high here and then a lower high. We've got a low here and then a lower low. So when you see that kind of pattern here, it is a topping formation, especially when the previous high was right around the last high that it just touched. That's what we call resistance. Now, we're talking about the Pro Vision and the new goggles and things of that nature. Again, the pre-orders were pretty cool. It's a $3,500 product. It's not going to change the trajectory of a company like Apple, especially when they're doing almost $385 billion a year, probably going to grow a little bit there. As I said, it did $80 or $90 billion in one quarter, right? So now you're looking at a $100 billion company per quarter. What are we talking about here? $1 billion product? It's just not going to move the needle. What's happening is, here's the Magnificent Seven. I just named this list the Mag 7. You know the names, Amazon, Google, there's Meta, Microsoft, NVIDIA, Apple, and of course, Tesla. These two bottom names are kind of drifting lower and not performing. Tesla's been underperforming the market since October when most things started to move higher. Tesla did for the most part, but then put in a lower low. So now I'm seeing two stocks who can't make new highs and are making new lows. They're in the Mag 7. I think it's turning into the Fantastic Five. And as I said, we'll look at Meta only because they have a competing product with their cool glasses by Ray-Ban. I think is pretty interesting. It's a pretty neat thing. But their whole division is $1 billion division of the metaverse. Again, here's a stock that does $134 billion roughly per year. Again, a drop in the bucket for these names. Both of these categories, I think, are sort of test products for these companies. And I think they're going to learn from it, develop new technologies along the way. But right now, it doesn't look like either of these products are going to change the course for both either company. But Apple and Tesla are struggling here, and I think the Mag 7 is turning into the Fantastic Five. All right, folks, that's what we have here today for the Chaikin Power Feed video series. I'm Pete Carmasino. We will see you here next time. Take care.